All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and the stock market is gonna hit new lows. Now, this is just my opinion, but we had Jerome Powell today. He decided to raise rates, but those SEPs, or the Summary of Economic Projections, what was in there, it said a lot before Powell even opened up his mouth today. So, we have a lot to talk about. I want to share with you why I thought this all week. Again, if you are watching today and the past watch list, this shouldn't come as a surprise to you. We were talking about holding some of these plays to the downside and all of that, but what we got today, it is kind of giving us more than just today. Literally, we got the first ever 2025 economic projection for GDP down to inflation rate, and even then, just, I hope you're ready for higher for longer, and this whole idea that nothing has happened and it's really just beginning, it is starting to hold some weight. So, we got a lot to talk about. We had a bunch of different plays today. It was absolutely insane. We have to go over the most important things in those summary, or the summary. I call it these summaries. I don't know why. And then the plays for tomorrow and where we can head by the end of the week. So, drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. I don't know what to do with my hands. YouTube.com/the stock market. We'll see you there in the morning. It's free 99. I mean, you just want to be there, especially if it keep going lower. You can't see it. I adjusted my glass. That was real nerdy of me. Okay, run it, baby.
Working to the couch, it's the 2020 election. Live in the head, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, Chad, the first key, we gotta go back to the simple stuff of yesterday. Like we were saying, even right before the event, you gotta go see the live stream recap if you haven't. We were talking about these first 30 minutes, and we were talking about believing the first reaction, and really, that's what we got. Right when the report came out, like we said, it came alongside the Summary of Economic Projections, and that had new information, but right away, you had a big sell-off. The dollar went even crazy, and I mean, honestly, we have to mention it. A big part of the morning today, there was that message from Putin and more war escalation. Again, oil, the dollar, euro dropped. There was a lot of reaction to that, and you got people talking about nuclear war all over again, so that was part of a lot in the morning. But like I was saying, the dollar was going crazier beyond that, and you had a very big initial reaction, and like we said yesterday, just believe that. And then take a look here. The first hour after the release was almost identical to June. That is that red line, but this time we actually ended up lower. We had the bounce a little slower, and then we were just barely above unchanged, right? But don't forget what happened in June. The next day, it actually led to a 3% decline. And again, last June was the last time we got this Summary of Economic Projections. So that's the first thing. But now let's get into the second key. What the SEP showed, it was really quite simply saying you are not going to get a pivot anytime soon, and there is going to be higher for longer rates. So remember, I showed you this one yesterday. This was the one from June. This is the new one from today. And if we go down here, it is the federal funds rate for 2022. Today, they said it's going to be at 4.4%. Now, why this is so important? Because that's the end of the year, and it's November, and you have only 2 Fed meetings left. So that means there is going to be at least 2 more Fed hikes, and chances are one of them are going to be bigger. Now, I misheard what Powell said. He said they were debating either 100 basis points or like 150 at this point. So it could be a little bit lower, and we're going to talk about that because that could lead to a play. But just initially, right off of the bat, that right again, before Powell even said anything, it's showing that, well, we're probably going to have some bigger hikes. Again, let me just go back. It's only showing you the June projection, but let's go back to the June projection and just remember, at the beginning of the year, the Fed thought this Fed's rate would be at 1.9. I know, it's crazy. It's got a moment of silence, I know, but hopefully you see what I'm saying, and this is something we got to talk about because this this is where, again, I have another key on it, but if anything does get worse, this is only based off of right now, and this can change a lot. But that's one of the most important things, because now if you're saying, oh, the Fed's going to pivot all of this, looking at the summary of economic projections across the board all the way to like until 2024, no one's really expecting a slowdown, and the Fed's saying, nah, we are like projecting that. And again, this is in line with the dot plot and all of that. So that's the first big thing I want to point out. But the next thing now, 4.6 for 2023, this means that this is just the beginning of everything. So again, back to the summary of economic projections, pretty much everybody on the Fed is thinking that there will still be some form of rate hikes at least until 2023. So they think the year is going to end at 4.4 for 2022, and at the end of 2023, they think the rates are going to be at 4.6. So essentially, that means the Fed's hiking cycle is just beginning. But now, this is where it gets good. You don't have to believe it, and the market doesn't believe it either, because some of the rate hike futures, or the Fed futures, they are actually pricing in cuts around 2023, where some people are saying, no, Fed is overdoing it. But again, the message that's being sent here, even Powell, the first question he answered today, he literally was like, just don't forget what I said at Jackson Hole. This is just solidifying the message that compared to the beginning of the year and where the Fed was projecting, now they are over projecting, if anything, or if things get worse, it's already going to be on this aggressive path. So that was the other main thing. We're still going to talk more about the SEP. Again, this is why it was so important. I didn't even read the readout today, or I didn't even have to, because they only changed 2 lines. Again, nothing even changed. All of the action was in here, but the summary of economic projections, it also shows a massive drop in GDP that the Fed is expecting, and also that the Fed is finally expecting unemployment to rise. Again, this is now quantifying the Fed saying there's going to be pain. I think they're literally forecasting at least 1 million jobs being lost by 2023. And on top of that, they also are projecting that GDP is going to drop even more from June all the way down to 0.2. And literally, I think it was like 2.8 at the beginning of the year on the initial one. Again, that alone, think about it. You got the Fed painting a very, very different picture all of a sudden. And this is coming down to the whole nature of like, yeah, okay, this was bad. And that's what leads to my next key here. I said this throughout the day. All of this is bad, and literally, if any data changes in the meantime, all it takes is oil going a lot higher from here, any commodity, a bad winter, a much hotter CPI, or even barely on the core. Again, you could probably think of 1,000 different things that could go wrong, but the whole idea is these projections are already very hawkish, but if anything gets bad, even then, this still might not be enough. And again, I don't know, like I said, with 4.62 for 2023, just remember, we were saying 4.5. That was kind of the limit, at least for this year, but it is highlighting something once again. But what you got to keep in mind is just moving forward, things could get fluid and get a lot worse. And now you could kind of plug it into this data as we move forward. But finally, or at least there's a couple more things, but as far as what we got here in the speech in Powell, he kept this speech very short. He ended about 20 minutes earlier than normal, and we've been saying that's what he did at Jackson Hole. That's him trying to be concise and get the message across. But like I told you, they barely changed the report from last time. And then at the end, I'm a real estate bull, but Powell did say that the real estate market could correct, and that he was saying it kind of needs to. So keep all of this in mind and watch the banks on that. But overall, it was just bad. You had the reactions. Again, we said watch those first 30 minutes. If you were watching today, we even called it out. We were saying, hey, watch the first 30 minutes. If it's still down, and even afterwards, right when the speech starts, the market will bounce, and just see if 30 minutes later will be like at close or above. And that's exactly what happened. And just don't get it twisted now. This was a bearish report. It could get worse. Obviously, peak hawkishness could have been there, but like I was saying all week, I think Powell has blessed new lows. But the one thing I want you to understand, it's kind of like the end, kind of like what you saw today. You can rally all the way down to the lows. Just as, it could happen quick or not, but we're about 4.5% from the lows. So depending on how you want to look at that, that could be either very big or very small. But like I'm saying, to get some of these violent rips, you got to be careful. And like we've saying, position light, keep your ranges wide. Don't get be a victim of the premium, and you could kind of play along, and that's kind of how we've been going about this to the downside. But yes, I am expecting lows, and I want to see how we react at the lows, and then depending on the data, then getting into the midterms, I really do think after the midterms, that might be the rally. But again, that's only about now, maybe like a month or so, and then there'll be a Fed meeting beforehand. So we'll see what happens. But the final thing, Bank of Japan tonight, other central banks around the world, this is all just beginning, my friends. So we might see more. And again, the next now, like what, 8 or 9 days, that is going to be the key to all of this. So I hope you're ready, but let us get into the plays. So right off the bat, I got a couple of plays that I'm looking at coming into tomorrow. We closed out a lot of the other ones. I'll get to those there in a second. But the first play I got to start with right now is /ZQZ22. It's one of Elon's children, but we brought this up yesterday after the report. This thing shot up like $300-400, and I want you to watch it. But now pretty much December is pricing half a basis point, meaning for the most part, this is kind of already there. There's about a quarter basis points more. But like I'm saying now, as the market digests all of this, you might watch this move. But I brought this up yesterday, and this is going to be the thing to watch now, is that after a new dot plot, new projections, and then we're going to get data in the meantime, we have a little bit of wiggle room on these Fed futures, and then they're going to move up and down. But if they start to settle into another trend, that could be a play, or at the very least, it could lead into a lot of things. So hopefully you've been paper trading this one, but definitely keep your eyes on that one. That's number one. Then number two, baby, Meta. And this one's interesting. You might be surprised with what I'm about to say. I think Meta is good for both ways. And I say that because today it was definitely down while a lot of things were up, and it has been beaten down. So any of the rally, or depending on what happens, I'm not really eyeing the upside too much, but I do notice this thing has overperformed to the downside. So in the event of a rally, they will be good to the upside. But now, even to the downside, they're getting to some big yearly lows on Facebook. Zuckerberg's already having the wealth. I'm having the fuck it. What do I? Anyway, but at the end of the day, though, just keep your eye out for capitulation, especially with these tech stocks. We even brought up the Google too. Still holding those, but watch out for them. I have an old trade on Meta, if you remember. So it's getting to an interesting price there, but definitely going to be keeping my eyes out on that one. And then finally, number three, this relates to what we said, the bank stocks. And again, I just said keep an eye on them. I still had that Wells Fargo. I didn't make another play, but if you notice today, the bank stocks actually started leading and hitting a low before the whole entire market, and they actually took they got affected more by Powell than the whole market when you actually end up looking at it. So keep your eyes out for them. But Morgan Stanley, if the banks keep leading down, they have meat on the bone. They're doing a lot better compared to, go look at like Wells Fargo, they're up a little bit, but like JP Morgan, I think even Bank of America, then go look at Morgan Stanley, they are not near the same level of lows. Again, they have been an outperformer. So I'm going to be watching it. I am hesitant because they've already dropped a lot. And like we said today, if you're opening up a play into this volatility, this is where it gets risky. So hopefully if it's options, maybe explore other alternatives, credit spreads, shares, futures. Again, just be on the lookout. But, opening positions, even on short shares, again, I'm going to have to go light with it. But I am hesitant shorting it at the low because then there's going to be a little bit more risk. But I will definitely be keeping my eyes out for them. But those are the main plays. As far as everything else, I made a lot of trades today, and it actually, again, it played out a lot like how we were expecting. I'm telling you, it was a great day, finger to the sky. That plan we were talking about yesterday, I was saying I kind of feel the mini rally, and I had that one ES. Well, I held on to that. I did open up the day, the take two. Those came back to life. I was short on those. I covered it for like $1 or $2 a share, made like $30 or something, not anything too crazy. And then that ES, the one I was down on like 2-3 grand yesterday or whatever, I think it closed down like 1,000. It was $3 grand at the worst. That came up. I was able to close it out for like $300 profit. I did not like how it was moving in the morning, but I did held it. The first hour, again, there was a lot of pop and drop. Then I sold out of that. Then later in the day, we were breaking levels. I made a day trade on the NQ. That's the NASDAQ future, 11,946 to 11,940. I think it was about like $100, $110. And then I played another one of the little rips there. This was after Powell on the SPY futures, or I was playing one of the levels break-in, shorted ES 3864. 364 to 3859. That one was like, I think, $200 or $300. So that one was a good one. And then I bought the dip right at like 3819 as the SPX was going below 3800. Held this one a little longer. You'll notice all the other future trades, sadly, they were like, I don't think I held any of those longer than a minute. Some of them were like 30 seconds, but the last one I held it for like 4 minutes there, closed out for only like a $30 or $40 profit there. But now we got to get to what I'm holding. Just remember the game plan, and now you get to take a look at this and see how it's performed. But also, this is like testament to what we were saying of position light, expect a wide range. This is why I've been going with shares here, to be able to deal with some of the ups and downs and not let it be too crazy and get shooken out of anything, but still holding those short on the ES. So again, I got the close out of the upside. We only realized profit on any of those, and now I still have those micro shorts. We're up 1,200 on that one now. The Apple, it says I'm up 28, but remember, I'm down like another 150, but again, those came back a little bit. Still have the Adobe. That one was a long play from a while ago, so still down 968. We're even down on the Arch as well too, but that one's not showing up. But then the Google, we're up 138 on that one now. The IYT, 388. The Netflix, that one came back to life, my friend. So I'm sure you would have gains if you had maybe time. I actually didn't check. I had to go to show you this, but the Netflix October 150. So even if you bought time when we opened up that play, and again, you saw it, the most we were down was like about $118. Let's say you bought this contract, it would have been about $110 the day that we opened up this trade. Even after today, I mean, we'll see tomorrow, that plays down to $70. So you lost 30% on that. You lost 30 bucks, and now you're seeing we're up a little bit. So again, explore alternatives, just wanted to highlight, but still in that, and then still down on Tesla, but we got to make some of the gains back. So that being said, now watch all of these plays, watch the Apple and Tesla. They finally started to give back up. I think those are going to be some of the movements, riding everything else. I'm still in the UNG and all of those as well. Depending on how some of the global tensions, they may come back, but at this point, we got to watch the levels, see how any of the bonds and dollar move, get anything from Bank of Japan, and then go from there, but be on the lookout for downside with a little bit of upside volatility till we get there. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, it's all about learning. That's it. What is wisdom? It's if you can learn from something, good or bad. It don't matter how it played out. We got another day. You got to keep focusing, but now you got to take what you've been through and turn it into profitable experience, baby. None of this was for a waste. It was there to prepare you. So I hope you're ready. But that's it. Just drink the water. Stay hydrated. I fucking love you. I'm going crazy. Was I speaking in tongues? I don't know. But Chad, I love you. Get ready. God bless you. Thank you for the positivity, and I hope you're ready. But again, we got to stay focused. So drink water, calm down, woosah, be good. Don't get emotional. Again, position light and just vibe with it. I'm so, okay, I love you.